Hello, hello, hello. Good morning, everyone. Happy December 9th, Monday morning. Good morning, Claudio. How are you?
Oh, good morning. Sorry. There you go. Good morning. How are you?
Good, good. Just coming off of a beautiful weekend. Oh, it was so nice this weekend. Like I went to the beach and yeah, I love anytime I can go to the beach and it's nice in December is like a good day.
Absolutely. Yeah, the weather was nice. I know the week prior was a little bit chillier than usual, but yeah, I also enjoyed the weekend. I actually had a couple of events I attended, and it was great to be out.
Awesome, awesome. Okay, so let me go to the chat. And thank you for everyone that's joined us today. Um, I want to enable panelists can chat with everyone. Attendees can chat with everyone. Perfect. I wanted to change that. So thank you for everyone that's joined us today. My name is Elizabeth Cotton. I'm the executive director of Black Tech Link. And we'll go ahead and share. But first, this is our first time doing a program like this in partnership with the state of California, GoBiz office. And so I'm really excited to start producing workshops over the next year. But I also want to hear some more about your business. So if you could please in the chat, like go ahead and share your name, your business, where you're from, just so we can get some insights on like where everyone's joining from for us today. I see Greg Rojas. Hello, hello. Good morning. Awesome. Florida. Okay, we got some people from out of state,
Oh,
which I
wow.
see. I know one of our partners for this is like the Veterans Business Outreach Center. And so I know they were able to share it widely with all their partners. So that's really awesome. Wonderful, wonderful. Okay. So well, everyone's
Oh, there's,
sharing
there's Hugo. Hi, Hugo. Good morning.
Operation Hope. Okay. Awesome. And then Maverick Roofing in LA. Nice, nice. Okay. Perfect. Real estate manager. Thank you. Okay, wonderful. Okay. Well, I'm going to go ahead and get started. I'm going to share a little bit about like our organization. I know a lot of you are new to our org programming, Black Tech Link. So I just kind of want to give you a little bit of insight on programming. Let me see. Let's see. Oops. Hmm. Okay. Can everyone see my screen okay?
Yes. Yeah.
Okay, awesome. So, good morning, everyone, again. Welcome to this online webinar, Building Business Credit, the role of personal credit in your financial journey. We have today our guest speaker, Claudio Bergen. He's a U.S. Business Access Advisor. So I'm excited to have him as a speaker today. But before we begin, I just want to share a little bit about like our program and who our supporters are. So this program is initiated under the SB TAP program, and this is a program funded in part through a grant from the governor's office, the state of California governor's office of business and economic development, also called GoBiz. It's facilitated by their subdepartment called California Office of Small Business Advocate. This program primarily offers support, consulting, and training services to small businesses, prospective small businesses, and nonprofits. It prioritizes initiatives aimed at assisting underserved businesses throughout the state of California. And obviously, like since we have some people from other locations, we're also open to helping you as well. As a grant recipient of the SB TAP program, Black TechLink has developed what's called, this is a program we started called the Small Business Mastery Program, which focuses on helping minority-owned small businesses and nonprofits in Southern California. Through this program, we've been able to provide training and technical consulting for sustainability and growth. Let's see. And just to share a little bit about our organization, Black Tech Link, we're a California-based nonprofit. Our mission is to focus on the economic development of Black and other minority communities in Southern California. We do that through workforce development, networking opportunities, trainings. We do this through marketing and community-based outreach. Our management team is comprised of diverse professionals, bringing over 15 years of experience serving clients across multiple industries. And, part of the program for SB TAP is like that today, we're going to be providing workshops that, that focus on all kinds of different aspects of business, from marketing to financing, fundraising, grant making, government contracting, exporting, real estate. And so if you want, I will put a link in the chat. And if you want to schedule some time to talk with myself or one of our consultants, you have the opportunity to do so. But today I'm really excited to have Claudio Bergen to be a part of our initiative.
And thank you so much for having me on, Elizabeth. I appreciate it. Appreciate it. Everyone that's on the call as well. We'll learn together.
Yes. And so, before, Claudio shares the presentation today, I just want to give a little background of Claudio. Claudio Bergen is the Assistant Vice President, U.S. Bank. He's a business access advisor. He has over 15 years of banking and financial services experience serving the San Diego market. He supports minority-owned small businesses in achieving their financial goals by providing resources, tools, and networks that promote sustainable growth. He also has his bachelor degree in international business from UABC, Universidad Autonomía de Baja California, and is also very involved in the binational community of San Diego. Claudio is also a board member of the San Diego Hispanic Chamber of Commerce and South County Economic Development Corporation. Please, everyone, give a digital round of applause for Claudio today.
Thank you for that great intro.
Thank you. Thank you. So I'm going to go ahead and let's see.
And I was just looking at we have people from Colorado, Florida. We were talking about the weather. So I think Florida probably has better weather today than us here in San Diego, but I'm not sure about Colorado. How's Colorado today? So I'm happy to be on the call. Thank you so much, Elizabeth, the Black Tech League, for having me on the call. I'll as you're going through, as we go through the deck, we'll try to make the webinar as interactive as possible. So please feel free to ask questions as we're going through the deck. So looking forward to the snow hitting our way in Colorado. Trying to answer any questions, anything that can be a resource for you. And I know we'll probably have startup businesses that are starting up, people that are in their growth, and so we'll just try to make interesting for everyone and just try to share as much as possible. As Elizabeth mentioned, I've been with U.S. Bank over 15 years now, several roles, and 20 years of banking in total. And my most recent role, which is part of a new program that U.S. Bank initiated about 2 years ago, is supporting minority-owned small business owners with access to information, connections, and resources, and access to capital. So then today we're gonna be talking about just how to manage your personal credit and the opportunities that can enhance or challenge your business credit. And are you able to share the deck?
Yeah, I'm gonna pull it up right now.
And I'm not sure if we go through, if I go into the presentation and then we have a panel discussion, or should I just go into the deck?
Yeah, so after he presents, I will invite everyone that's on the call. If you want to ask specific questions to Claudio directly, I will invite everyone from the audience into our conversation. You can speak directly to him, kind of like a talk back, and he can provide feedback. You guys can provide comments, and just a way to make our program a little bit more interactive. Give me one moment. Okay, I think this is it. Bear with me. All right, are we good to go?
Yeah, we can share it. Yeah. So I think if you go to perfect.
Okay, let's get it.
Excellent. Perfect. So then I'll just have you work the slideshow. So
Slides.
today's yeah, perfect. So today we're going to about talking a little bit about business financial foundations is how to personally manage your credit and how can it impact your business credit. So let's go on to the first slide. So we already did an introduction as far as myself, but I am the advisor that covers the entire San Diego market territory. There's some territories that we have, like in LA, we have 3 advisors with different backgrounds that support anyone that's a small minority business owner. Let's go into the next slide. Perfect. So the agenda for today is we're going to go over these 4 topics, and I have about 3 slides that covers each of the topics, and then we'll just further debrief each of them. And then, as Elizabeth mentioned earlier, then we'll have at the end of the presentation, we'll be able to answer questions and just go be as interactive as possible. I do like to speak, but I also like to just make sure that everyone's engaged and answer as many questions as possible. So today we'll go over understanding credit types, business credit reporting, credit worthiness, and business credit options. Let's go on to the next slide. Okay, perfect. We can skip over the next one. Excellent. So why is credit important and to myself and to my businesses? So there's the two main objectives of you managing your personal credit is when you're applying for financing and to effectively manage your debts and obligations. That's the first thing that creditors or vendors will look into, right? So your personal credit history will be reviewed. Credit history helps creditors decide whether to extend financing, and then they also they looked into your character, right? How do you pay your personal debt, and how do you build your personal history? So those are the main reasons why we're going to talk about how important it is to manage your personal credit, and then how it can help you expand on the business. Let's go on to the next slide. So here on this, you can see actually the personal and business spectrum. As you can see, there's two there's two measures that we do, right? So the importance of the personal credit, and then the importance of the business credit. So depending on the age of the business, when you're first starting out with your businesses, aspiring entrepreneurs and emerging businesses will need to rely heavily on their personal credit as their business is established. So typically, what we see, if you're just in the stage of ideation, if the stage of just starting up your business within the bank, what we look at is primarily if you're 0 to 6 months or 6 months to 2 years. They'll lean more on your personal credit so than on your business. So then that's why it's very important for you to manage your personal credit, and as the business grows, and then the term of your business grows, then it'll rely heavily, right? So then beyond the 2 years, that's when you get into the middle mark, which is as small business grows, business credit will become increasingly important, but personal credit will still be a factor in lending decisions. And then beyond, and also depending on the industry, but beyond 5 years, and then also depending on the industry and how the actual organization is filed, then that's where you can get into a point where only very large business and sophisticated businesses may not need to rely on business owners on a business owner's personal credit. So regardless, my recommendation is always just manage your personal credit as best as possible, and we'll go into the different topics. So then that way it'll be easier for you to grow. Primarily financial institutions, any type of credit lender, they'll still rely on how you manage your personal credit to extend the business credit aspect. Let's go on to the next slide. Okay, so should I, we can go into the questions. So I can, let me see if I can look at the full question. So what if the business is more than 2 years old but has only grown incrementally since inception? Will personal credit still be a factor? Yes, personal credit will continue to be a factor beyond the 2 years. We've seen organizations that have been in business for 10 years, and depending on the industry type, and then how the business is actually formatted, whether it's sole prop, if it's corporation, LLC, then we'll definitely look into the personal credit. It'll still be important beyond the 2 years. Let's go into the next slide. So here are some of the factors that differentiate from reviewing your personal credit into the business credit, right? So the main four topics that we look into is personal identifying information, credit history, inquiries, and public records. So those are the main four pillars that we looked into where we're trying to finance your personal credit. What distinguishes, and this is my answer, Kenny, your question as well, it's how the business is identified information. So mainly how it's formed, right? If it's a sole prop, how many business owners are in there, and what's the percentage of the partnership. We have certain industries that are considered high risk. On those organizations, we looked into anyone that has a stake over 10% ownership. So in that case, we want to know mainly for the most part, anyone that's involved. When it's just a what we call is just a standard organization, then we want to know more about any business owner that has 25% of ownership or more. We look into the business credit history, business background, registration, and financial information, and then any public record that are out there. If there's any liens, any judgments, any tax liens, and also we look into the what it's called check systems, which all the banks, it's information that's shared within similar to a credit bureau, but we just looked into how do they manage their checking account, right? If it doesn't review as far as overdrafts and things like that, because that is data that's shared, that's kept within each bank's organization. But if there's charge-offs, if there's any type of fraud that happened within the bank organization, that information is shared within institutions. And then that could also, even if you have great personal credit and great business credit, that might also prevent from extending credit to an organization. Let's go on to the next slide. Perfect. So here we're just going to look into detail, right? What I was just sharing. So what is an example of a business identifying information? So business names are aliases, business address, phone numbers, web presence, and then the very important, the Dun Bradstreet industry classification code. So we do look at, we review your information, and on a few slides ahead, we'll actually share what's actually looked into Dun Bradstreet. If you heard of that organization, but it's a very important factor when we extend credit on how the information that's on there, and if there's information, right? It'll make organizations feel more comfortable, and you might get a lower rate or opportunity for a larger loan based on the information that's on there. And then the industry classification code, that's the code that we use that's specific to the organization or industry segment that business is in. So and that's how the banks are able to, or financial institutions are able to distinguish if it's considered high risk or not, depending on that code. And for the most part, financial institutions are very similar. I've worked in three different banks, and they share they share almost the same alignment as far as what is considered high risk and what is just a standard industry. But there are specific banks that might work with some of the high risk industries. So then that varies from bank to bank or financial institution. But for the most part, it'll stay within the same range. Business credit history: companies that have granted credit, payment data from suppliers and creditors, and then risk scores and ratings. So there also is information that is shared beyond the credit score, and besides Dun and Bradstreet, where PayNet is one of them. This organization and actually shares information between vendors and suppliers. So this is when certain organizations, depending on what your business is, that they might be able to lend to you based out 30, 60, or 90 days out, but that's a credit that they're just externally relating it to you, and it has nothing to do with trading that information on a business credit, but that information that's on there that also might impact you on a positive or a negative way, or might challenge extending a loan. Business background registration and financial information. But we just talked about registration and corporation data, the legal structure and ownership of the business, history of the business, affiliations, corporate financial reports, contracts, grants, loans, anything that's been issued by the federal government, and then self-report data as well. We also see that some of the similar to personal credit, where we looked at the debt to income ratio. We also on the business side as well, right? So we have to review to make sure that the business is sound, and it's able to repay the actual credit that we're able to extend. So that's why they look into other opportunities that are on there, so whether you have contract transfer or outstanding loans. And then public record information, just to make sure that there's no lawsuits, liens, and judgments against the businesses, or also if there's any type of lien or tickets that they might hold the business back from extending credit. Let's go on to the next slide, Elizabeth. So here's the major players in business reporting. So these are the three main differentiators from the personal credit into the business credit, right? So the Dun & Bradstreet, it focuses on how your business interacts with vendors and suppliers. So trade credit information. So for some businesses, they have the opportunity. One of the most common ones that we see that I see here at the bank, grocery stores, right? So we have local grocery stores that they'll have a connection with some of the suppliers, right? So it might be someone that's supplying the milk, the canned goods. So they'll do a personal credit between them. It will be 30, 60, 90. I've seen some creditors, they'll do up to 120 days. And that information gets reported on Dun & Bradstreet. So it won't go on your credit history for the business, but it will be reported on Dun & Bradstreet. Equifax, this is very similar to what's reported on personal credit. It focuses on how your business has managed business lines, credit, and loans. And then Experian Business, it's focused on credit information for both lenders and business vendors. So this experience mainly how you're repaying back your existing loans through other institutions. Let me see. I have a question. How do prior sole proprietors navigate a loan if we have a high DTI due to real estate rental holdings with the starting LLC, for example? I'm sitting with the $1.2 million in liabilities, which is awful for a single dude making six figures, but it's just fine for a business. So in this case, it's very important. Once you get into actually acquiring a business, my recommendation would be placing it in this case, under the LLC. So then that way your DTI doesn't doesn't get impacted on the personal side. One of the main factors that I share with everyone once we're starting to build your business credit, or once you establish the your business, even if it's sole prop, and even if you have the same tax ID, my recommendation is always, U.S. Bank is one of the few banks, but I know that there's other banks out there that they're able to lend to you or open up, I'm sorry, a business credit card based on your personal credit. But what it does, it'll start reporting credit on that business, even if it's the same, even if it's a sole prop, and even if you didn't file for a tax ID, but any debt that goes on there, it'll separate from your personal debt. So then that way, preventing issues, especially with debt to income, right? You're trying to purchase a home, trying to buy a car, and then that way it'll separate that that business credit card, and you'll start building on that. Um, can, can we go into the next slide? And thank you. Great question. Great question, Gregory. Other credit reporting agencies. This is one of the there's two of the very important ones. One I just shared. The PayNet has a proprietary database of small business leases, loans, lines of credit that sells to banks and non-banks, and will give you a free copy upon request. So PayNet is one of the organizations that I just spoke about, where you have the opportunity between suppliers and vendors, and you can actually, it'll be one of my recommendations. If you're already actively working with a supplier, if ask them if they're working with PayNet, so then that way they can actually start reporting favorably, right? As far as like the trades that you already have in place, whether it's 30, 60, and 90 days, and of course that you're paying on time. So that'll help you with future opportunities. And then LexisNexis is another organization that's very commonly used by banks. So here, it's a combination. What they do is there's a report that goes into your business credit, and also with non-traditional data, which is part of the supplier and vendor chain, right? So they'll look into that, and then they'll also look into, is there any liens and judgments. So banks will primarily look into LexisNexis once they get into higher volumes. Within our bank, it's when you request anything over $50,000, then we'll pull up a LexisNexis report, and it's very important to also just to see what's on there, right? Based on, even if you just filed for your business, even if you just filed for a tax ID, to pull these reports, just to make sure that's just like any type of fraud. It also happens very commonly now on businesses, right? And we just want to make sure that you started with a clean slate, and then you can work on it from scratch, right? From zero, and then build from the ground up. Let's go to the next slide, Elizabeth. So checking your business credit report. So literally what I just spoke about, is important for you to check your business credit report once a year. Apply and pay your business credit report from one of the main credit agencies. The fees from each agency of your credit report will differentiate, and use an alternative credit source to access a free business credit report. Within U.S. Bank, we also have access to, and many banks or many organizations, financial institutions, they do have a program as well where you can do the same. We'll give you free access to your personal and business credit once a year, and then we do it through, in our case with U.S. Bank, we do it through an application. So you have access to Dun Bradstreet, through Experian, and then through Equifax. And that's let's go on to the next slide, but that's my recommendation, to make sure that you're reviewing your information accurately, and then just to make sure, like when you're reviewing your business checking account or your personal checking account, to make sure that there's no fraud on there, right? So why should I establish business credit? And these are the main components, right? This is the bread and butter or the reason why we want to do this, right? So lenders, it helps determine approval in terms of financing, right? So just at any personal loan that you might acquire, it's based on risk, and it's based on your capacity to repay, right? So you want to get the higher loan amount, and then you want to have the best rate, then you have to be in the parameters of higher credit and lower risk, right? Suppliers and shipping companies, they decide to grant a deferral of payment for goods and services. Just how I mentioned, I've seen some organizations that they do 180 days on businesses where they and no interest, right? So I mean that's and I've seen many businesses being built that way, right? Not all businesses, depending on the industry that you are able to build their business that way. Having low cost, right? Low amount that you need to put in to start it up, but then also just building from the actual suppliers and the opportunity of them lending to you at no interest rate, and then at 30, 60, or 100 days out, it's optimal, right? So that's one of the main reasons you also want to establish business credit. Customers, that they determine if your company is a legal entity and reputable. Insurance companies, this is another important factor. It helps determine the price of your insurance policy. So they also measure risk. So if they see that you're an outstanding a business that already has partnerships with local vendors and suppliers, and your credit is in you have high credit rating and you're a low risk, then it also helps with your insurance policy for your organization. And then procurement officers helps you evaluate to execute government contracts. So I know this is top of mind for many organizations, and this is something that the government agencies look into. So then also solidifies what type of supplier they're actually working with, and what type of client that they'll have as well. So very important factors on why you should um, worry about your business credit. Let's go on to the next slide, Elizabeth. So this is just the cycle, right, of supporting your business growth and sustainability. Access to finance, it makes our lives much easier and allows the opportunity to grow. We tend to always think about lending as just debt, bad debt, paying interest. But just as I shared, right, to get access to those lower interest rates, to getting access to just the supplier loans, right? The Where you don't pay an interest rate. Ultimately that's going to help you give you access, and is going to help you acquire inventory, or it's going to give you the opportunity to manufacture, to buy that equipment that you need to be sustainable and to grow your business, right? Purchase the necessary equipment and materials, and then manage the working capital. So this is just literally the working cycle of obtaining credit and having access to capital. So it's just focusing on what the goals are for your organization, but taking the right steps and providing the circle of life, right? The circle of business, the business life. Let's go on to the next slide. So, what should you have, and what should you do as far as establishing your business credit? So, the tax ID is very important, even though it's not necessary, especially when you're starting, when you're building a sole prop. I do see that primarily my recommendation is always to create a fictitious name statement and to file for a separate tax ID, even if it's a sole proprietorship. It's not needed, but that's what you should have. Business credit report, as I just mentioned, we also want to, as soon as you file for your business, even if it's your personal tax, if you're not filing for an EIN number, just to go on there to see if to make sure that there's no blemishes or anything that might hold you back from growing your business. And then business lenders or reporting on your credit information. So also you can get a report of PayNet or LexisNexis as well, to make sure that it's on there, right? So get a copy of your EIN, verify if there's already a business credit report, and then also ask lenders and suppliers to report information about you, which I just mentioned. PayNet is a very important one. So if you're already working with the organization, just ask them if they can report it on there. Once you get your actual reporting, you see that there's nothing on there, see if they're able to provide that to help you, right? And help you with the growth of your business. Oh, let's go on to the next slide. Oh, what was the bit about the fictitious name statement? Oh, that I always so adding a fictitious name statement if you're a sole prop, just making sure that you identify, you separate the name of your business from the name of the actual organization. So um, it's very important. Just it makes it easier just to have that separated from your name, and then or separated from your organization, right? So literally that's the if you're filing for a tax ID or not, my recommendation is always to file, just to protect your name, right, within the state that you're in, and then it also helps you distinguish from creditors or liabilities or anything of that sort. I make a recommendation to file for one. Let's go on to the next slide, Elizabeth. Okay, so now we're going to go into how the five C's of credit, right? Oh, you're fine. You can go back, Elizabeth. So this is the five C's of credit, right? So this is what mainly all the financial institutions or all lenders look into, right? So when we're underwriting a loan, so capacity, collateral, credit history, conditions, and character. So the capacity is the traditional loan of underwriting. So when we look into the capacity is we want to make sure, and I believe it's on. Let me see if it's on the next slide, Elizabeth. Okay, no, we can go back. So on capacity, this is what we based on how much we're able to extend the loan, right? So how much are you able? We look at the income of your business, and we look at your expenses, right? So this would be how would you manage on the debt to income ratio on the personal side. This is how we would measure if you're able to actually repay back the loan that you're applying for. Collateral, that's how we also measure if you're buying equipment, if you're buying a building, if you're buying a vehicle, then also how we measure risk as well, just to make sure if a collateral is involved. There is many loans that could just be based on the general business assets, right? That's where we put a lien on the actual just on the business, but we don't put a lien on any type of collateral. And or we can also extend loans through when where you're already established. We can do unsecured type of lending, so lines of credit or loans as well that are not necessarily linked to any type of collateral. And then the credit history, right? The balance between how you manage your personal credit and what's in your business credit and how you manage that as well. And then the conditions and character. So these are the two pillars that base that's based specifically on what's the term that you're trying to extend, what is the reason, right? So whether you're buying inventory, are you trying to buy a building? Is it just working capital? Is it for workforce, or is it just to pay out additional debt? So those are some of the conditions that the institutions look into, and then the character as well. So how are you making these payments, right? And what type of loans are you getting to your business, right? Are you applying more than you should, or maybe you're not applying enough, and you might need additional funds to get you into a better situation. But understanding that whole picture, those are the five C's of credit, and on a couple of slides we'll look into how uh, it makes a difference if just for a startup business, and whether if you're already an established organization. I'm sorry. Let's go into the next slide. So the non-traditional data. So typically non data that will help lenders predict risk, right? So some of the things that they look into on the personal side: utilities, telephone services, especially with cell phones, right? I mean, it'll we'll look into if maybe there was an outstanding Verizon bill or a AT&T bill that you might not be aware of, or sometimes it happens where on the personal credit with especially if there's a combination of owners, right? So if your business partner might have had a situation where where we see commonly is when they're going through divorces or things of that sort, that we might see a blemish on there for a telephone service. That might be something that we need to take care of before we're able to extend business credit. And some of the other business non-traditional data, business reviews. You get there's organizations that will look even into Yelp, they'll look into PayNet, just to see supplier information that might be on there, and then also merchant account transactions. So whoever you're doing your payment processing, also to make sure that there's no blemishes there, or sometimes if you have, we've seen organizations where they have transactions where, let's say you sell a product that's $20-$40 on average, and then you see transactions for $1,500 or $2,000, and they'll be placed on hold when they process that credit card payment. So sometimes that information doesn't relate to actually what the business is doing, or doesn't make sense. And some of that information as well gets shared within payment processing. So that might be some of the non-traditional data that certain organizations might look into as well. Let's go on to the next slide, Elizabeth. So here we go, different lenders and different priorities. So here it gives you an example on how lender A provides startup loans considering all 5 C's and emphasizes on personal credit and collateral. And then lender B providing working capital considering all 5 C's to some degree, but emphasizing on the business credit, non-traditional credit, and conditions. So based on, you can see where kind of the how it overlaps, or how it differentiates from what you're actually applying for. So on a startup loan, they're literally just basing, are we using collateral or not? Verifying if you have personal credit and what's in there for credit history. They understand that there's not going to be any credit history, but we want to make sure that there's no blemish, right? They don't so much look at the conditions as other, because it's a startup, so they'll know that it's either to purchase the inventory, to build from there. So it's very consistent. They already know what the goal of the business is. So the important factors is the collateral, the personal credit history, making sure that there's no blemish on the business history. And those are the 3 main factors. Whereas for working capital, that's what we're going to look into. We're going to have to rely more on the business credit and look more at the non-traditional credit data, because we also want to understand the conditions of the actual of the reason that you're getting that working capital, and how soon you're going to get that back, right? There's certain businesses that it might take, let's see, I'll read the question right now, that they might have, the turnover of their operating cycle might be 3 months, right? Where from the time to buy the goods, work the goods, and then actually sell them and then get repaid back, it might be 3 months. But we might have organizations where it was farms, for instance, right? There's a season to it, so you have to grow the crop, right? Have it extracted, and then have it go into the store, whatever procedure it goes through, and then sell it. So the operating cycle might be a year long. So that's why the conditions are very important. The question is, when we apply for a startup loan after approval happens, do we still have the chance to go with another bank for a better loan, or we're bound to each loan we tried for? No, we're able to, if you already, if you received the approval, but you haven't signed for the loan, we're still able to see that. For the most part, what we ask for is to make sure that you didn't prove that you didn't sign for the loan, and you declined or rejected that approval. So it's very important. It's a great question as well. So you're not bound to, you are able to shop around. My recommendation is to do that as limited as possible, right? Try to get as much information before applying, because it's still an inquiry on your business and personal credit. but you're now bound to take that. You're not stuck with that loan. And as long as we just get proof that you actually decline the loan, then we're able to still grant you a new loan with the organization. Let's go on to the next slide. So what is a good business credit score? So these are the factors similar to a personal business credit, factors that impact your business credit score very much like the personal: time in business, payment history, credit mix, credit utilization, and then mistakes on your credit bureau. I know this is especially with business credit. It's very important for you to be reviewing what's outstanding. It's more commonly to see fraud happen just because we don't pay as much attention to business credit as personal, because you let's say you just bought a van or you bought equipment and you really don't have a need until a year or 2 years from now, whereas your personal credit, you might have a closer need and you're more attached to the personal credit. But I see it more often than before where I mean, there's just people out there that are taking advantage of just people that are not looking into their business credit. And I've seen anything from getting loans, lines of credit, credit cards, and just it really puts a damper on opportunities for you. So I would really advise for you to just keep a closer eye on your business credit. Let's go on to the next slide. So business credit options. So here we're just going to talk about the three different types of opportunities that are out there for business owners. So we have the traditional lending, subsidized resources, and then alternative lending. Traditional lending is either provided by your financial institution and the CDFIs, which are called community development financial institutions. Primarily, what's unique about my role and is that I do when I make a recommendation, whether you're in the stage of ideation, coming up with ideas, we help you with the small business plan. If you're in the startup process, then I may make recommendations working with our community partners and U.S. Bank. So we're not tied directly to just U.S. Bank products. We do work with organizations. For the most part, these institutions, the CDFIs, they're either nonprofit organizations or mission-driven organizations that will help startup lending or specific industries where they might be able to grant you the loan, whether and where you've had issues with financial institutions that won't grant a loan. Primarily banks or large institutions, they want to see 6 months to 2 years of a proven track record, whereas these organizations are able to provide you with the low rate and provide you with the startup loan. So within my role, what's unique is I'm able to make those recommendations based on regardless of what stage you're in your business. Now, you might need something more sophisticated that we can definitely even work with those organizations alongside U.S. Bank as well. So many business owners are not aware of these organizations that are out there to support community or small business owners. Subsidized resources, and that's tied part of the SBA program and local government and small business loans. And then grants is another way of you obtaining lending. Also, U.S. Bank and for the most part, large financial institutions also work with the SBA department. What varies with that type of lending is we might have additional information that we might need to provide, such as a business plan, ask additional questions if veteran-owned, women-owned, minority-owned. It might be at a higher rate, but it'll grant you an opportunity to get the loan that you need. And then alternative funding, either friends and family, which is not my recommendation, fintechs, crowdfunding, venture capital, angel investors, where you present your product and and actually have people that invest, depending on the city that you live in. But there's also opportunities, and then based on the industry that you're currently in. Here in San Diego right now, we're going through the angel investors conference, which was just last week. Primarily, it was geared towards artificial intelligence organizations or through cybersecurity organizations, but but that's also an opportunity that's out there for small business owners. And then incubator or accelerator programs. There's so many organizations such as chambers of commerce, organizations that'll help you build your business plan, build your business, and there's also grants that way. So though primarily those are the three funding resources that are out there within the community. Let's go on to the next slide. Oh, and here just additional assistance. I mean, we there's opportunities. Black Tech League, right? It's not on the list, but I've got Black Tech League, U.S. Banker, CPA, Economic Development Opportunities, local chamber. There's also SCORE and Business Mentor. And I believe it's so just this is a summary. We just went over understanding the different credit types, business credit reporting, credit worthiness, and business credit options. So I know we've had discussions and questions throughout the chat, but I believe Elizabeth's going to open it to more of a discussion or seeing if there's something that the group would like to share or ask, or something that I might
Awesome.
have. I know it's a lot of
No,
information. It's a lot
a
of me
really good
talking.
job.
I'm sorry.
You did a really amazing job. Like, I really appreciate you breaking down everything, especially when it comes to businesses building their credit, just like a personal story and why I wanted to do this workshop.
Hmm.
As a small business owner myself, after a couple years, I started, developing revenue, and I literally went to like my bank, US bank, and I was, trying to obtain like a credit card, and they were coming back and saying, no, and I was like, why? Like, I have all this revenue, like, for my business, and they're like, your personal credit still needs help. And it wasn't until I started to like working with a credit repair specialist and like really like getting my credit, like, score up, removing negative stuff off my credit, I started getting those opportunities for business crediting options like credit cards, loans. And so I really thought this was an important conversation just because a lot of the clients we work for come to us and ask for like, what are some ways that we can finance, we can fundraise. And I thought this was a very pertinent conversation that we have for them to understand, just the importance of like, obtaining like those credit options. So really thank you for that. In the near future, I'm going to see if we can do it this year, like, or maybe at the top of next year. But I am going to have a credit repair specialist to kind of help people further understand, like, what are some things on your credit report that you can like remove off, how you can talk to the credit reporting agencies and dispute things and things like that to like really build your credit. Financial options such as like secured credit cards that you can get to like really start building your credit back up if you have poor fair credit. So yeah, I'm glad that this was like a beginning primer conversation to that. And then I know like in the you also mentioned financial institutions other than large banks that provide, financing options such as CDFIs, community development financial institutions. And for those that are in Southern California region, we're looking to host 3 in-person workshops in LA, Riverside County, and San Diego, where you're actually able to meet with those CDFIs, and they can tell you like how they support small business, nonprofits, like credit financing options. And so, yeah.
Absolutely. In my case, we're there's 18 advisors nationwide, and I mean, if it comes up with someone that's out of state, right, we have access to, because each state or city might have a different program, and we can definitely support anyone that's interested with the other, just to find out what organizations are out there for them that could support them. And going back to the secured credit card, there's many banks or institutions that as low as $300 you can start your secured credit card, and that goes into your credit bureau as a regular credit card. So organizations are not able to tell if it's secured or not. It's just something, a credit card that's there that you can manage it from 6 months to a year, right? I've seen small business owners that within 6 months they're able to get their credit in a great state where they're able to extend either personal credit or business credit. But it takes usually 6 months to a year. And you can do it from $300 all the way to $5,000, and build repair your credit that way as well.
Awesome. And I see a question from Brad Flaherty. Who can we speak to go through our individual credit report and make suggestions to best set us up for a business loan for those with good credit but wanting to have the best odds? Like I mentioned, we do have Black Techling does have a credit repair specialist. His name is Jamel Trent, and he's helped me build my credit, and so I can connect you with him. And then I can send out his information like in a follow-up email to everyone, and we can go from there. And definitely, like, I'm working with him to develop a workshop, like, insights from a credit repair specialist. So that should be coming up in the upcoming future. Um, at this time, though, I definitely, well, first I want to say thank you, Claudio. This was really great stuff, and I'm really excited to work with you and the US Bank team, like in the near future and upcoming year. But I really want to bring everyone the into the conversation. So, and this is an opportunity for you to kind of just share,
Yeah.
some comments, chat, like ask questions directly to Claudio. And so, here we go. So you will be invited.
Well, one of the questions is, what are some of the signs of predatory lending? Uh, Really high rates, right? uh, Yeah, it's getting into. I mean, for the most part, you can do research as far as what is the standard rate, right? Common, I can tell you right now, it could be currently within our rate market, right, or interest rate market, but uh, 8.9 annual percent yield. I'm sorry, annual percent rate of 8.99 to 14.99. Once you get into over the 20%, I mean, it's the 20% interest annual interest rate, and then the term higher or shorter terms than a year, right? I mean, it's just it varies case by case, right? But once you go into the higher than 20%, I mean, it has to be a situation where why do we need, right? Is it really gonna help the business, or is it just going to drown the business, right? So just getting overwhelming debt. But I mean, high interest rates would be definitely a sign of predatory lending. Or also we see just the resource, right? Where are you getting this loan? Is this an organization that has history, that has value, that has where are you finding these lenders, right? Are you going online? Are you going through a neighbor, right? So those are some of the I would say, like, the high red flags, right? That it's a predatory lender. Um, I'm not sure. Did you have something that you might want to add, Elizabeth? That you've seen some of the signs for predatory lending.
I
The
think,
emails, right? The emails too. I
yeah, the
mean, it's
emails, like the spam emails,
usually
right?
find them is also a sign that also that's yeah, very how they act, right? Very pushy, very um, that they want you to sign before you actually read the disclosures, or they're pushy. I mean, and that would be another sign.
Awesome. Thank you. Thank you. Yeah. I would say, throughout the next year, we're going to be working with a lot of community partners, and all of them are, do similar work or align and have like go-to organizations that provide lending in each of like the communities. So I would just be on a lookout for that. I do have kind of like a short list of like lenders that I would, that I do recommend for small business owners and even nonprofits to just check out that are willing to work with you, micro lenders, per se, CDFIs. And so I can provide that.
Absolutely. One of the questions is, what about contract finance? Is it something that U.S. Bank will consider? It is. So yeah, we do consider, depending on who the contract is with. We also do factory lending depending on the organization that you're. I'll give an example. This is an organization that they sell vitamins, and but they were signing a contract with Walmart and Costco, and they just didn't have the cash flow to actually to make all these vitamins that Walmart. They went from just supporting the local community to, hey, having a contract with Walmart. But we actually went into the Walmart and Walgreens contract, and we were able to do factoring, right? So they gave them 3 months to make all the vitamins and be able to supply. So through that contract, we were able to finance them because, I mean, we felt comfortable that, I mean, Walmart's not going to go anywhere, Walgreens is not going to go anywhere, and we were able to supply a loan to that organization, and just to get them to buy the vitamins and then supply and fulfill that contract. And then it was a 3 year. It's one of the best or most proud success stories that I've seen with that organization, because now they're nationwide, and now they're bringing Target as well into. So it went from a local community vitamin supplier to now build nationwide brand.
And can you dive a little bit deeper into what actually is factory lending?
So absolutely. So in this case, for example, if uh, Walmart wants a contract with you and they need $100,000 of whatever is it that you sell, and they'll say, okay, every 3 months we're going to need $100,000 of product. So what we do, okay, we look into the contract, we see who was a part of it, how you sign. We looked into the organization that's actually giving you this contract, which obviously in this case we look into Walmart, right? So do they repay back? How often do they repay back? We look at their Dun Bradstreet. So we felt very comfortable. And what we do is, in this case, it was the rate will be a little bit higher, right? Because we just base it off the contract. So it could be between 1 to 3% at each contract, right? So we'll give you the $100,000 for you to make enough of your product so then they can fill that contract. But we'll take Walmart will pay directly to US Bank, right? The $100,000, but then we deduct the 3%, which in this case you would net $97,000, and then US Bank will keep the $3,000. But it's a great way of businesses to get ahead, because there's in case if you're not able to get a line of credit for $100,000 and you need it every 3 months, until you build enough income, enough revenue for you to fulfill that need, then that would be a great way to go. So literally, it's an advance from your contract, right? And we'll take in the U.S. Bank in this case will take the $100,000 payment, and then they'll just deduct their part, and then they can go by contract through contract, based on the relationship that you're getting the yeah. Mhm.
Thank you. Wonderful.
I know you
So, did
unmuted
anyone have any
me.
questions?
You unmuted me. It's Wanda Rogers.
Hi, Wanda.
The only reason why I asked about that is currently I have a contract with LA Unified School District for my healthcare apprenticeship program, which will roll over into a bigger contract, right?
Okay. Mhm.
However, I'll have more contracts coming on the other side of the house. And so at this moment, with the climate and going through this political upheaval and all the rest of it, there are a lot of small businesses that are truly struggling, and I'm one of them. But I find that contract financing will assist me with working capital, right? So like, and having this contract, they're going to make a one-time payment. And my goal is to just give it back in less than 30 days, right? But have that relationship. Does that make sense?
Yes. So did you want to have a loan or line of credit in between just to have that, or just, or are you talking about just continue to have those contracts just so obviously just to build that relationship, but
It
do you
could be
also need cash flow in between?
it both. So it could, I would like the long-term relationship. That's
Mhm.
number one. But for the immediate need, yes, having that ability to meet my obligations, working capital for a month or 2 months or 3 months, whatever it is.
Just to get there. Yeah. I mean, my recommendation would be to obtain a line of credit on your business and not directly tied to that contract. Because that, like what we're just talking about, factoring is directly tied to that contract. But if you just need a line of credit for the business just to have cash flow, then you're able, there's lines of credit where you just take out what you need just to get you to the next contract and then repay it back. In this case, you mentioned two months, right?
Yeah.
Yeah. So I think that would be my recommendation.
Thank you so much.
Absolutely. And there is
Someone had a
lines of
question.
credit that are just based on, as I mentioned before, they're unsecured, or some are just based on general business assets of your great rates between 8 to 10%. And then it's literally just works like a credit card. You just advance from it, repay it back, and it's available for you. And it's usually based on, the financial institutions will give you 20% of your annual gross rate. So if that makes sense, if you have $200,000 worth of sales, then for the most part, you'll be able to get a line of credit for $40,000.
Okay. And one last question.
Mm-hmm.
You made me think of something as you were speaking. So, do you do based off of revenues as well? I think you said that. So if I came up with a forecast of what my revenues would be in the next 5 years, do you lend that way as well?
Not U.S. Bank. U.S. Bank is based on the history, but the CDFIs do projection-based lending. So they will. Some of them they'll look into 2 to 3 years. I think for the most part they want to see 2 years of projection-based lending, and they'll even we can even set you up with a partner that can actually build into that, right? But banks for the most part they want to see prior history, so they want to see a year to 2 years because they'll look at their P&Ls, they'll look at your personal and business tax returns. But the CDFIs, I mean, here in California, I know about two of them that they'll do projection-based lending, and they'll even do it for startups. I mean, depending on the industry, right? But if it makes sense, if you have a great built-out business plan and you have a projection plan of 2 years, they'll lend based on that. So yes, to answer your question. Mm-hmm.
Wonderful. I see
And
another
then
question. Are business owners expected to personally pitch their business to bank Shark Tank style, or is it all digital now?
no, I mean, there's no stupid question I wanted to first say. These are all great questions. But no, we do have what we call banks. We say KYC, know your customer. So we do have to have a good understanding of, and that's why we have the industry code on there, just to make sure. Okay, this is right to first distinguish: is this standard industries, is high risk, and then we ask the questions: what is the revenue? Who are your clients? Who are you? Is this an online business? Is this a in-person business, brick and mortar? So we do go through a questionnaire just to have a better understanding, but it's not It's not like like a pitch competition, right? Where I've been a part of, which, and that's why we talked about the additional funding resources. I've been at Jacob Center. I've been at San Diego Startup, where I was a part of the panel where we did have small business owners, right? They would do either a 1 minute, a 3 or a 5 minute pitch, and then they would get a grant, right? The top three businesses would get a grant. So there is, and that's how they funded their business, right? So there is there's opportunities out there doing it that way, but not for banks. So just want to know, have a good understanding of what is it that you're doing and what do you need it for.
Right, right. Absolutely. Okay. And were there any other questions?
Not a question, just a statement here, but thank you both Claudio and Elizabeth. This has been really great for me. I'm a disabled vet that just lost my career, so I'm looking to branch out into other avenues, and veterans are really set up for that. So just navigating where exactly I can find information and where it's stored, people I can connect with. This has been an awesome resource, and I look forward to doing more networking with you all.
Oh, absolutely. Thank you. And thank you for sharing your story. And we're definitely, I mean, unfortunate the situation, but it always opens up new opportunities. I was just at the Veterans and Business Expo, and it was about 3 weeks ago. So our role is also to support veterans, women-owned businesses as well. But part of what we also share is the supplier diversity, right? So similar to government contracts, right, where we have the San Diego County, we have the San Diego the seaport, right, the Port of San Diego. We have U.S. Customs, where they're giving these contracts to veteran owner, to any minority-owned small business owner, depending on what you do. U.S. Bank, we do have opportunities with small business owners as well. So I was there with our supplier diversity department, which just to share a little bit about what supplier diversity means is U.S. Bank, we spend $600 million a year on contracts, right? So anything from painting the walls to cleaning services to rebuilding our offices. So we go into cities to make sure that we support small business owners and give them contracts. So we're not directly tied to any large organization. We really want just local small business owners to be a part of that opportunity. And we were there for the Veterans Expo, and even to me, it was eye opener just to see some of the things, because I'm learning what all of U.S. Bank supplies, right? But in this case, it was a drone company that they actually, what they do is they do the 3D mapping, right? So they'll take a picture of the building to make sure that there's no cracks or no foundation problems, because U.S. Bank needs to upkeep with the buildings. So literally, that was a contract that we were able to supply, and it was a veteran-owned lady that owned this drone company, and that was one of the contracts. I believe they're going to get like a 3-year contract. So I was very proud to be a part of that, but also to me, it was a learning opportunity, because I don't know anything about drones. I didn't know anything about foundation of buildings, but it was just that opportunity. I'm aware of like cleaning companies, landscaping, things of that sort, but there's opportunities out there. And I mean, I'm just sharing this so then that way you're aware. Now, I mean, all the banks, all organizations, they have that they're trying to support small business owners and the opportunities out there. And the same thing with government contracts. So yeah, that definitely want to keep the connection going, and we'll be happy to support you that way as well.
Yeah, through our organization, we will have some segments on government contracting and corporate supplier diversity. I know we're planning an event in June, the end of June, called Subs Meet Primes, where if you have a business, you're able to connect with other businesses to fulfill a contract. And so, and then we'll also have like other government agencies, other companies talk about supplier diversity, how to register and sign up, because it looks very different from whether you're wanting to do government contracting at the city level, the state level, the county level, the school district, the federal level, right? And so we want to be able to like kind of demystify that, and we'll have some programming on that later throughout the year. We always participate in the Black Entrepreneurs, Leaders, and Learners Government Contracting and Certification Summit, which is at the end of June. So looking forward to that. Again, I also put in the chat if you guys want to have any consultation with us. We have a wide network of amazing business professionals that can, support, if we don't have someone immediately in our network, we can definitely refer you to one of our community partners. We have over 40 community partners locally in Southern California, which can provide support at very different levels. And so if you want, I did put the link in there, schedule some time to chat with us. And yeah, we'll go from there. I did see Ken Gosson raise his hand. Ken, did you have any comments, any questions?
I do. Can you hear me okay?
Yes.
Yes.
Great. So I'm a partner with an international company and trying to open up the US market. This to be their first presence in the US market for North America, obviously. My question would be, you mentioned some of the major players in the US market for, again, reporting and utilizing US funding. My question would be, how can I leverage an international, say Canada, for example, to find if they can provide that type of marketing capital, right, to bring it into the US. Again, I'm partnering with this company. They're based in Canada, and I'm looking to see if they use, all the different tools that we have, just to say, this is the company we're bringing into the US. I need to leverage that, whether it's Nexus, Lexus, or all the different credit teams, including my personal credit, obviously, but ideally, internationally, how does that work from that perspective? If there's a currency exchange, we know that, but leveraging, this company's been in business for since 2015, and we're going to expand the market in the US.
I'll speak from my personal experience. In this case, U.S. Bank it's the domestic bank, right? So we primarily just work with organizations within the United States. We don't do as much research internationally because we don't
Local funder, yeah.
Yeah, correct. Except for Elevon, but I was a part of Citibank, and Citibank did work because it's part of Citigroup, right? And they're an international bank, and they would work with local. In this case, I was able to support it was an organization in Mexico because that organization, it was very active, had a large presence in Mexico. So they would go to the local bureaus in Mexico as well. And then they were able to tie it together. So it was a small business that came from Mexico and then expanded in the US. So I'm not LexisNexis. I mean, there's other bureaus, but sometimes when you work with an organization based, in this case, it would be, my recommendation, I know it was Royal Bank, right, of Canada. I think that was one of the large organizations that also had presence in the United States. So, and now I believe they're part of Bank of the West. So they might have a connection, and they might be an institution that you might have to do a little bit of research, but they might be able to have some partnership there, and it might open up the opportunity for you based on what you're mentioning.
No, perfect. Yeah, exactly.
And I would also say like Black Tech Link, like right now, today I talked about our SB TAP program, but we're also a recipient of another state of California grant, export training workshops. And so we have a lot of connections with US Commercial Service, Export Import Bank to provide those sources as well. So please feel free to reach out to me, and I can connect you with some of our consultants that can help you bringing services, products to market to the US as well.
No, perfect. Thank you. Appreciate that. Great information.
Awesome. Any more questions? Comments? Well, if not, I want to say thank you to everyone for joining. This was really, really good conversation, and it was the first of many conversations that we're going to have to really help small businesses and nonprofits, have a really good understanding of what's needed to, to build their business financing options. And like I mentioned, like look for, check us out, look for upcoming workshops. I am going to send out a survey. Please, please, please let us know how we did. Your feedback is really important as we start to build programming for next year. And again, I want to say thank you to Claudio Bergen. Please feel free to reach out to him. Claudio, did you want to put your information in the chat?
Yes, absolutely. I'll go ahead and do so. And thank you so much for having me on the call, and thank you for taking time to learning more about the opportunities that are out there. Right. I mean, this is a huge step for for everyone to be just learn more about opportunities and successful and being successful at what you do. So thank you for having me on, Elizabeth. This has been great. Um, this has been a great on and great. I look forward to learning more about all the businesses that are out here and just collaborate together. And as you mentioned, so first of many to come.
Absolutely. Well, again, thank you. And everyone have a really good holiday. Oh, and just real quick, like we're having a holiday party. If you guys want to meet with our team in person, we're going to have a holiday party December 14th in San Diego at Teradata Corporation in the evening. And I'll send out information about that. And I look forward to connecting with you guys soon. Have a great holiday season. And thank you again and have a good rest of your day.
Thank you so much. Thank you, Elizabeth. Thank you, everyone. Take care. Happy holidays.
Happy holidays.